Right now, we're going to proceed into our final panel of the day. And this panel starts with this idea. The tokens have been built, the tokens have been issued, but what's going to happen when they're in the hands of investors? Where will they be traded? And what's the deal with ATSs? To moderate this panel, we're very lucky to have Linda Lerner. She is the Senior Counsel in the Corporate Financial and White Collar and Regulatory Enforcement Groups at Crowell and Mooring's New York office. And she is also the chair of the newly formed American Bar Association's Task Force for Token Securities, Offerings, and Tradings. Where she found the time to be with us today, I don't know, but we're very glad that she's here. So please give a big hand for Linda and the rest of the panelists.
Good afternoon, your last panel of the day. Here we are. Please give a huge round of applause to Howard Marks, CEO of StartEngine, who brought you this amazing day. To Howard's left, had to think for a second, John Wu, Digital Assets Group, which is part of SharesPost with an ATS. Shari Noonan from Rialto Trading. The differentiator of the ATS she wants approval for is that it's going to be corporate bonds and maybe other fixed income instruments. And down on the end is my partner, Carlton Greene, former chief counsel of FinCEN. So we today are going to talk about and try to educate you about the regulatory hurdles. You all want to, or many of you, want to issue tokens, but your investors are going to want to monetize those tokens someday, and they need a place to do it. That's what we're going to talk about, and we're going to try to educate you on the problems that we as ATSs face in getting approval and doing this in a compliant fashion. So the first thing I'm going to ask you to do is just go right down the row, except for Carlton. Sorry, Carlton.
Is that all right?
Please tell us in 2 or 3 sentences what differentiates your ATS or ATS to be from the rest. What is unique?
Thank you, Linda. Just for full disclosure, Linda is our attorney. So if we don't get our ATS registration, I can blame her. But here's how we see it. At StartEngine, our ATS is going to have a retail component where we're going to accept unaccredited investors, accredited investors, investors who originally invested in some of the companies that we helped raise capital for, and they will be able to trade the shares they purchased as digital securities. How do we do the digital security? We have our own system called ERC 1450. We put it on the blockchain. It's visible to the general public, but ultimately, whether they have a wallet or not, it doesn't matter. They can still go on our platform, put their name in, we'll recognize what they have and help them sell it. And the bid and the seller, the seller and the buyer are going to be met and matched, and eventually they will be able to trade. We are working with a bank, and the bank is going to hold the money, the cryptocurrencies, and the transfer agent that we have called StartEngine Secure will hold all of the securities.
John.
So the digital asset group at SharesPost is creating liquidity solutions for security tokens. And one of the things we're doing is creating a marketplace for secondary trading of security tokens. And I think what gives us a competitive edge, I will broaden that question from just ATS to, I would say, a complete compliant infrastructure that's been tested for over 9 years. And that gives us a big advantage because it's not just getting the ATS, it's making it operational. It's having the right people who have processes in place, getting a chief compliance officer, the technology associated with that reg tech, I would call it, and also having licensed people to run that. So it's far more complex than just having that. And you know, you're not dealing with just the SEC, you're also dealing with FINRA, who is there on a day-to-day from an operational perspective, making sure that you are doing what you say you do.
Shari, you have a long history in the ATS space. How did you get the idea to do corporate bonds in an ATS? and how's it going?
Sure. So Rialto Trading is an operational ATS in the corporate bond space. This is actually my fourth ATS. So I established, built, and operated 3 other ATSs within large banks, and then struck out on my own with 2 other co-founders to found Rialto. So we're operational in corporate bonds, and right now we are expanding that mandate pending regulatory approval into the digital security space for both trading and custody. I think what differentiates us, or the uniqueness of what we're looking to do, is you may have read that we partnered with Bittrex, and so we are partnering with them, and they're supplying the technology for the trading infrastructure and the wallet infrastructure. So we're really combining that with our expertise in operating and running an ATS and building the liquidity solutions and really getting that velocity of trading in terms of building a network, because that's really the difficult part of starting an ATS.
Shari, what are the issues that you've encountered in getting regulatory approval?
So in terms of getting regulatory approval from the trading perspective, it's been fairly straightforward. The trading perspective, it's been fairly straightforward. It's been sitting down and talking to the regulators about the flows and making sure you've got the right operational expertise in-house. From a custodial perspective, that's really where we spent the bulk of our time, walking through those flows to get that comfort. So that's where we spend most of our time on a daily, weekly basis, walking them through that.
Howard, how are you handling the custody issue?
So it turns out there's this concept on the blockchain and cryptocurrencies and all the exchanges that you will transfer your tokens from your wallet into the exchange, and then the exchange will hold it on your behalf, and you can trade. Now, if the exchange gets hacked, well, you lose everything, and there's no insurance. That's pretty much what exists today. The way we look at it is that we will put the investors' Bitcoin, Ether, dollars into a bank account, and that is insured. And that gives some protection. And then the shares, the digital securities, they don't need to be in anybody's street name, which is typical what you see in the world of finance, or they don't have to be in the custody of our system. They're held by the investor. It's held in book entry. And they have a representation of that book entry on the blockchain. So there is no risk of losing those securities.
Are any of your ATSs using distributed ledger technology to actually run the platform? Howard, I know yours isn't, but what about you, John, and you, Shari?
So,
Go ahead, John.
so on our US marketplace, it is very much I would call it more of a centralized exchange right now, because a lot of the processes that need to be completed, it's just a lot faster to do in a central manner. However, ultimately, we will print those onto the blockchain. So from that perspective, it is distributed. And we're also creating a second platform, what we call GLASS, which is a global liquidity and settlement system, where it's effectively a B2B network of settlement providers and global exchanges. And that is going to be a distributed manner.
Shari?
So in a similar system, eventually it will be printed onto the blockchain, but not every single transaction will be housed
And
on the blockchain.
Howard, you have a registered transfer agent. You want to talk about that function?
Well, yes, because a registered transfer agent is registered with the SEC. It holds for every shareholder all their information, how many shares they own, and who are they. And all that information is in that database supervised by the SEC. The nice thing about having a registered transfer agent is you get a superpower. And the superpower is that you're not limited to having only 2,000 shareholders. If you are issuing shares with Regulation A+ or crowdfunding, you can have 10,000 shareholders and remain as a private company up to certain volume and amount of shares outstanding in the public. So the registered transfer agent, the beauty of it is that we don't have to put in the blockchain who's who in the details, their social security number, their address, that stays in the transfer agent. But the transfer agent works directly with the blockchain and talks to the blockchain so that there's a public display of who owns what on the blockchain with all the transfers.
The SEC's Enforcement Division is engaged in examining at least 300 prior offerings of tokens. They're examining both the issuers and the intermediaries, and you all heard this morning about the CoinDot problem. What are you hearing from the issuers that you're working with about whether they've been subjected to the grilling by the SEC's Enforcement Division?
So right now, we're not working with any issuers because we're still pending regulatory approval, so I will defer.
John?
So talking to potential issuers out there, even though we are on the secondary trading side, we work with guys who are going to do the primary. And because if you're going to do an issuance, part of the reason you're doing it is for liquidity. And if there's no secondary marketplace, why do you do the primary anyway? So they are all recognizing what you just said, Linda, and going forward, all the issuers are very focused on doing everything in a very compliant way.
And Howard, we had a little experience with the Enforcement Division. You had to get a clean bill of health that you had been completely compliant since the day you were born to move your application along. You want to say anything about that wonderful process?
Most people will not admit or deny anything they receive from the SEC, right?
Uh-huh.
But I'm here to say that, look, we work with them very closely, and your firm has been great in helping us with that. We have not issued any utility tokens since the beginning. It's something that I felt very strongly that we need to focus on helping entrepreneurs survive this whole wave, become successful. And so we've only issued companies who issue either shares or digital securities that are security tokens. So in their case, they've done it per the rules, they use the exemption, regulation crowdfunding exemption, regulation D506C exemption, or regulation A+ exemption. So in this case, it's not really, hopefully, any concern from the issuance. There could be other issues down the road.
Carlton, now it's your turn.
Okay.
Since we're talking about compliance, and there are two big areas that Carlton concerns himself with. One is AML, and the other is money transmitter rules. So let's start with when a platform takes cryptocurrency, when a trading platform, an ATS, takes cryptocurrency in payment for a token, what rules apply?
Yeah, so it's an area that's really in flux right now, and it's a dangerous time for that because, you know, the SEC and other regulators, CFTC, state regulators, and FinCEN are all starting to realize that they need to get out there and start enforcing to get people to kind of herd people towards the exits of proper compliance on this stuff. The basic rule for money transmission is anybody who, as a business, accepts money, currency or value that substitutes for currency from one person and transmits currency or value that substitutes for currency to another location, to another person or to the same person at a different location, is a money transmitter. And they have said that if you accept fiat currency for a token and give them a token in exchange, that's money transmission. And so there's an obvious overlap there between the money transmitter rules articulated by FinCEN and the rules that the SEC is contemplating for security tokens. Now, there was a letter that FinCEN sent to the Treasury, that Treasury sent to Senator Ron Wyden, where they basically said, look, some of these tokens are going to be securities. Probably the SEC will regulate those, but nothing's been firmly established. My guess on where it shakes out is that at the federal level, if you're talking about security tokens, the SEC is going to regulate those as securities, as they should, and as a matter of your AML obligations, at the federal level, you're going to be regulated as a broker-dealer for AML by the SEC and by FinCEN. That opens up the real question, which is what happens in the states, which is has been a huge impediment to the development of everything token, right? And that's because, almost all 50 states have a money transmitter law. Being a registered broker-dealer with the SEC gets you exempt from 13 of those 50 states. That leaves a lot of other states that conceivably could treat you as a money transmitter.
37, to be exact.
Yeah, that's right.
That's a
right.
lot of states, and every rule is different.
Yeah, and they've all taken different approaches to this stuff. And there's some commonalities, and there's some reciprocity agreements, and all kinds of stuff is percolating there. But it's a huge area of uncertainty, and it can be kind of a submarine effect. I've seen clients that have been in business for a couple years, and thinking they're fine. And then a state regulator will pop up and say, we think you're a money transmitter, and you've been money transmitter for several years.
Do you think that issuers who take money directly in Reg D offerings might be, they take money, they issue tokens, right? And the flow is directly with the issuer? Could they be money transmitters?
Yeah, so this is kind of that initial sale of tokens, right? When you're first producing the token and you're getting it out there into the world, in theory, that satisfies the plain reading of the test for money transmission. And so a lot's going to depend on how FinCEN and SEC draw those lines. I suspect if it's a security token, SEC will regulate them as an issuer. FinCEN won't try to treat them as a money transmitter. Who knows what happens with the states? But it can be really interesting, too, when you're talking about issuing a token that's not a security. When you're talking about just issuing a new cryptocurrency. Because then SEC is probably not going to be the regulator. And that initial issuance itself can be money transmission if you're exchanging tokens for fiat currency.
So now that we've scared you with that one, tell us, what are the most critical issues in doing AML? And please think, maybe you have investors coming from all over the world.
Sure.
So
yeah.
what are the real hurdles?
Well, first of all, a key thing to think about, I guess the first thing is please do AML, right? Please have AML, because so many people in this space are just kind of ignoring it, which is really dangerous now, I think, because as somebody said earlier today, that what is likely going to happen is they're going to start making examples of people, and we've already started to see some of that. The first round of enforcement, I actually see enforcement going in two directions. There are the people that FinCEN, Treasury, and the Department of Justice consider to be not legitimate actors, right? People who are advertising, and this isn't my view, I'm just reflecting the view of the regulators, people advertising anonymity as a feature of their token, right? Liberty Reserve was a good example of that. BTCE is a good example of that. What happened to those guys? Well, Liberty Reserve was destroyed by Section 311 action under the USA Patriot Act that prevented any U.S. financial institution from having any dealings with them. Its founder was arrested. BTCE, its founder was arrested stepping off a plane in Greece. They got a $40 million penalty that wiped them out. And the counter example to that is Ripple, right? So Ripple didn't think they had to have an AML program, but they were a legitimate business. They were trying to do things the right way, and they had legitimate customers and all that stuff. And so what did they get? Well, they got a non-prosecution agreement from the Department of Justice and a very light penalty from FinCEN. It was $700,000, which I'm telling you from FinCEN is a light penalty. They issue multi-billion-dollar penalties. And so I think you're going to see that effort to winnow out the legit from the illegitimate. And within the idea of having an AML program, the thing that concerns me most is I often hear it get referred to as KYC, all right? And people think of it as an initial obligation when you first bring a person in. You've got to make sure they are who they say they are. You look at their driver's license, and then you're done, and they're off to the races. That is not what it means to have an AML program. You have to have an entire system to understand the business of your customer, understand their business model so that you can identify money laundering risks. You have to do transaction monitoring. You have to be applying rules that are designed to detect money laundering and other suspicious activity that might indicate financial crime. You've got to file suspicious activity reports with FinCEN. There's a whole host of obligations that go along with that. And one interesting thing in token is, in token area, the token area is that we don't necessarily have the service providers right now. I mean, there are people emerging, which is really exciting to see many of them at this conference, but we don't really have very many companies that have figured out how to do that.
So let me segue right into what are your thoughts on how you're going to surveil for suspicious, illegal, manipulative behavior by the subscribers to your systems? Shari, let's start with you.
So in terms of manipulative trading,
Or any other violative activity. There is a category on this Form SAR that you have to file if you think something is funny called other. And other is anything.
Oh, so you mean specifically for AML, not for sort of manipulative trading,
No,
like spoofing
well,
or
but
anything
you
like
would
that?
have to file for
Yeah.
that. So whatever
So-
you want to include.
So in terms of the AML program, we have an existing AML program because we have our fixed income business already up and running. So that already exists, and it's something that we do today. So our director of operations, he we have the FinCEN and the OFAC checks that we do, and we have every other week we get our file and we check it against our existing customers, and so that's something that we have today. Now, the difference is when we expand the business is going to initially be accredited investors, broker-dealers, and institutional investors. So for broker-dealers and institutional investors, they're registered with they're registered with regulators, so it's a little bit easier to validate information around them. For accredited investors, there are some things that you can ask for, so it's a different process.
John, how does SharesPost detect manipulative activity, and then what do you do aside from filing a SAR?
So to first add on to what Carlton said, doing AMLKYC and accreditation is hard enough on the primary side. But when it flows down to the secondary trading of that, you magnify that difficulty by, 5, 10 times even. So it becomes a whole nother ball of wax that we have to deal with. And luckily, tied into what you're asking, we've had experience doing this for 9 years for unregistered, uncertificated securities, which are private securities. And we already have a marketplace for that. So the rules that we are enforcing and the monitoring that we're doing for specious or for wash trading or other activity that is suspect, we already have a process in place, and we're going to overlay that same process into the security token side.
Switching gears for a minute, is it possible, John, this is a good question for you, is it possible, do you think, to have a decentralized exchange trade security tokens?
That's the world we all want to get to. The reality is there's going to be intermittent steps to get to that. So in any of these decentralized exchanges, you still have something in the middle, which is effectively an escrow. And even the thinnest escrows, it is still an escrow, so therefore you have to custody some shares, and therefore they will require a broker-dealer, a proper broker-dealer. So one of our solutions is to effectively, in our B2B network, GLASS, Global Liquidity Settlement System, is to invite other settlement providers into it and figure out a way to effectively settle and clear as a service for some of these decentralized exchanges. And that, I think, will be an incredible project and something we're working on.
Where do you see that we're in our infancy? There are a couple of ATSs that are able to trade tokens, and there are a lot of applications pending at the SEC. Where do you see this nascent ATS industry going over the next 5 years? Shari?
I think it's going to have a similar path to the equities market. So at the equities market, as you know, and we live through, there was a real explosion of platforms and of marketplaces. And so there were, a real proliferation of these marketplaces, and there were a big fragmentation of the marketplace, and then a consolidation. And then eventually what happened was, the marketplaces linked up, and there were certain regulations and market structure changes that required those marketplaces to link and provide, things like the NMS rule, MNMS, that required them to link up and provide best execution and sweep certain markets. So I think eventually that's where we'll end up.
Howard, if someone came to you and said, I want to form a broker-dealer and start an ATS, what advice would you give them?
Well, besides hiring you, of course, I would tell them this: it is better to create from scratch than to buy one. You hear of these companies who are buying broker-dealers. I don't think they realize the amount of work, and I learned that from you, by the way, the amount of work to do the amendment of a broker-dealer into something like this with crypto and all of that, you might as well just start from scratch. And then when you buy a broker-dealer, you end up with all the liability from the past and the FINRA reviews and all the problems that come with it. You're way better off, and it's probably way less expensive to create one from scratch. What's the big deal? So that's the route we took. We just created one from scratch, and we're in the process. It's been many months. We're probably reaching, I don't know, month number 7 or 8, but it's going to get done, and I really believe it's a good thing. 9,
by the way.
That's I could have a son. I could have another. Okay. It's worth it. Here's what I think. I think the regulators are very thoughtful. It's worth it. It's worth going through that pain, because the other end of it, you have a clean structure. It's a good structure. You get to put in place all the things that they require. And then it's better for the investor. It's supervised, it's protected, it's a great thing. And the ATS, you can design any kind of flavor you want.
John, 30 seconds.
So I agree with that. If you are going to do it from scratch. However, my advice would be just stop. Don't do it. I mean, there's just too many smart people like Howard and the other people on this panel who are way ahead in that process. And if you're going to apply from scratch, it'll take 18 months. You have to get a settling clearing broker-dealer first before you can even go get the ATS. It'll take you a long time. You should just wait for 5 years from now when things are clearer, and your edge will be from a business perspective of some sort instead of regulatory.
Thank you all to my wonderful panel members. Thank you. And now our last keynote speaker.